You are watching Market Watch, the brief overview of the key events from the world of finance. Last week, on Friday, a report was published on the change in the Basic Price Index of personal consumption expenditures in the United States. In April, this indicator increased by only 0.2%, with a projected growth of 0.3%. The slowdown in growth, albeit slight, has provided incredible support to the U.S. stock indices. Recall that this index is the key indicator for the Federal Reserve, influencing the decision on the key interest rate. Therefore, even a slight slowdown had a significant impact. But it is also important to take into account the unexpectedly strong decline in business activity in Chicago. After all, this is another reason, albeit weak, but still a reason for easing the Fed's monetary policy. As investors reacted violently to the first signals indicating a slowdown in the U.S. economy, weak data in the labor market report may become a real sensation. Given that it is the labor market that remains the main driver for inflation, the deterioration of the situation in it will significantly increase the risk of lowering the key interest rate. This is a strong bullish fundamental for the stock market and a bearish one for the U.S. dollar. Therefore, the publication of this report may be accompanied by a significant increase in volatility in financial markets. And now let's move on to the precious metals market. Gold could not take advantage of the moment and resume growth, expecting a decrease in the yield of U.S. government bonds. This indicates that investors believe in a soft landing from the Federal Reserve, provided that a reduction in the key interest rate begins this year. Thus, the risk of developing a more powerful wave of decline remains elevated. And although the bearish scenario will be activated only after the price returns below $2,300, a breakdown of support at $2,330 may be the first strong bearish signal. Traditionally, we conclude the review with the cryptocurrency market, which still cannot get a strong enough bullish fundamental factor. Recall that the approval of the ETF for the purchase of Ether did not cause the expected optimism, thereby increasing the likelihood of another wave of decline. We are talking not only about Ether, but also about Bitcoin, which in turn can provoke a general deterioration in sentiment in the cryptocurrency market. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.